Hello everyone, petar.jacimovic here from volumeaction.com. I want to post this update on Euro-New Zealand dollar currency pair. I posted on my Forex Factory thread. If you follow, I advise you to sell Euro-New Zealand dollar around 1.6, let's say 450 was price, and I wanted to post the video to explain you the reasons why and what you need to focus on actually when you trade the currencies in the spot FX market. That you don't need any fancy indicators. You can use pure price action, which is the pure to use technical tools like trend lines, pure price action knowledge, and try to catch good risk reward ratio in every setup. In addition, you can use like volume to help you to even have the more more confidence in your entry. You can use the volume. And also you can use oscillators if you want, of course. You can if you can spot some divergences, it's also fine to have, but it's not necessary actually. The most important thing is to follow the I'll put you to lower this indicators. It's to find follow the trend, trigger with the trend, and watch the price action, how price reacts on different levels. So for example, I marked the swing highs we got on the 1 hour time frame on the Euro-New Zealand dollar in past let's say 2-3 days, and I marked that, and I saw that swing high we got here, here. Also we got swing high, the major one in this stage here. So as you see, the most of these swing highs came to the area of 1.6510 area, 10 level. This actually represent that this is the key resistance level. You can call that point of control or how you want, but it's in this stage it's a key level. And now you watch how the price react on that, and to see what's the market, what the market wants to tell you, and how to actually trigger and how to find a good opportunity for your sell. Basically, I marked this because we got strong area where we got a lot of swing highs here, and I marked this. And what I got here is that price tested this few times. Also, you can see this volume spike here. It's happening on the supply, and this supply, so it's massive supply came in the terms of the volume, the tick volume, and we got also from a technical aspect, like we call it this divergence, when we got lower swing highs and oscillator and higher swing highs on the price. But when you enter, actually every situation is different. In this situation, I found a strong upward trend line here, and basically price broke that trend line at this stage here. So even if you enter on the breakout at this stage, you must put stop loss all the way below, above the key cluster here. So stop loss should be around this stage here, if you enter the breakout. Anyway, in the nature of the trend lines, usually it's the price tend to retest trend channels, to retest a few times some critical support resistance before it go. So basically, as you can see, this level it's tested a few times before it's restarted the downward movement, and this channel was tested here after the breakout. Price went to test this area and exactly this cluster here, and then we started to go lower. And look at the beautiful supply here, came in about 80-90 pips, 90 pips of drop. My entry actually, and my advice, I did pretty much entry when I saw this is a successful retest of the trend line. Also, it's good supply came in, very good bar here. In the background, I hope the strong point of control resistance held, and I got a broken trend channel successfully retested. So this is all you need in the trading on the spot FX market. You don't need to know about anything else than pure price action. You need to have knowledge. You need to spot the good opportunities. It's not easy always to see on the chart good levels and critical levels and how to trade them, and there is probably everyone saw this resistance here on the swing high, but how you will play around that resistance is actually key thing, you know. If you sell here immediately after the price, for example, if the price immediately after the price rejected from that swing low, and many of them will try to sell, and look at what happened after. It went to fill them all, you know, and to close them, the sellers at this stage. Now the buyers, since the buyers saw the breakout of the resistance, now buyers say, oh my god, let's buy this, you know, this is going very good upward. But you don't need that. You must establish the cluster, you must establish some critical point, and to observe. In this stage, one swing high doesn't make me sell this pair. You know, in the professional world, you don't, you know, one swing high rejection, it's not enough to build position on. I need much more signs of the topping than just the price rejected from swing high and that's it. You know, it's 90% of the case it's not like that. Before it price will go even what you plan, it may go, you know, few times even to go higher and lower, you know, to catch everyone's stop loss and, you know, and make the noise here before it go into direction, into clear direction. So I couldn't know before, for example, this breakout, and before I saw the two times held here, and I saw that fake, let's say this fake breakout, the price went higher and back into this area, and then the final thing, the retest of the trend channel, and again the same key level for the Euro New Zealand dollar. After this rejection, this is the time where you can build position on, because of this in the background, broken trend channel, and finally topping. You know, this can also be a, for example, head and shoulders formation with this head and this shoulder. This is a sign of the topping. You know, topping is not like swing high and then drop, you know, or retest swing high then drop. So it must create series of sequence, you know, of the price action to confirm bottoming or topping, and that's what you need in the price action. I teach that on my mentorship program into the details, how you can spot this, and every situation is different, every position, price isn't not always in the same, it's every time it's different. You need to use different, you need to find for yourself different key points for that currency you observe, and key levels where you must put stop loss, or where's your take profit. Because if you go here and I go here, I got the major support. As you can see, this is, everyone can see this is a major cluster. So of course I will put target there, because I don't know if the price will break that or reject, you know, and I don't want to lose, for example, profit if that happen. Okay, so you put target around this stage here, and that's a risk reward ratio around 1 to 4, since the risk was about 50 pips, and I'm going for about 200 pips in this one, you know, and this is what you aim for. I'm not interested in less than this, you know. You secure your position, price went like 75 pips. If the price take me off here or close me, that's it. I tried, you know, price didn't have power, you know, and I don't want to play with this one. Maybe if price go again and receive rejection here, but I don't want to, you know, if something went like 70 pips lower, I secure that and then see what will happen. If there is enough power, it shouldn't, you know, it must go without doing, you know, backing up again 80, 90 pips from the entry, you know. So basically it's like that, and I wanted to post this, and you know, I want to tell you that you don't need any fancy indicator stuff like that. You need pure price action, the technical analysis knowledge, you know, to use the trend lines, you know. You can use volume like additional. You can also use some oscillator if you like, of course. It's not bad to have, but it's not so important, you know. It's not most important. Most important thing, it's actually on the chart. It's pure price action, you know. Everything additional, it may be a useful tool if you like, you know, you can use, but it's not so important like price action for itself, you know. So this is an example I posted on the Forex Factory thread when I entered, and this is the video about the explanation of that. So basically, as you can see, swing highs here, a lot of concentration on this level, this area held a few times, and finally breakout, retesting, and that's it. you know, price went. Do we go lower without that going to break even here? We don't know. So I triggered, and I pretty much don't care right now. I have my target, and you know, to create a bottoming, pardon, and that I exit manually, it needs to create something like this the same way, just opposite. You know, if that don't create, I hold to my original target area. That's it. I hope you enjoyed this analysis, and of course, if you want to start my mentorship program, it's a 7 days course. I teach you all about the price action, what you need to focus on the spot FX market. Also, I'm telling you about the investments, what is the best to invest. You know, generally, if you have capital, you want to invest, you can put on the stock, and you can trade also forex and stock together, and which is in my opinion the best thing. What is the most important on the forex? What's the most important things on the stock? It's a different aspect of investing. Forex is full speculative market. It doesn't actually pay too much attention to fundamentals. It's you know, the stock is something different. The volume is centralized. This is a thick volume of the forex, so it's a big difference. You know. Anyway, if you're interested to start investing and start your success, you can contact me, and I will be very happy to start to teach you, and you know, how to properly invest and create good success and earn good money. That's it for this analysis. I wish you good trading and have a nice day.